Hey, what's going on? Happy day. Happy day. What's going on, guys? As always, it's your local real estate agent here, Garati Joseph, and your mortgage dad, Ronnie Fairley. As
Hello,
always, we got
everybody.
Ronnie's dog in the background barking. He wants to join us on the show today.
Yeah,
Yeah, so we actually just was talking about what we wanted to talk to you guys about on this day, and we was saying, hey, paying down your mortgage. Obviously Ronnie being the mortgage dad, this is his expertise. We
yeah,
was talking about whether you want to do a 30-year, 15-year. Ultimately, the longer you hold on to your mortgage, the more interest you pay, and it's more money in the bank's pocket. But ultimately, you want to do what? Be able to own your home free and clear as
yeah,
soon as possible, because by doing that you're paying less interest on that mortgage. So with that,
yeah,
Ronnie, what's your take on that?
yeah. It's a common question, right? So when people are looking to apply for a loan, do I do a 15-year and a 30-year mortgage? Everybody's first thought is, let me do a 15-year mortgage because I want to pay it off in 15 years versus 30 years. And then what a lot of people don't realize, their monthly payment goes up drastically,
Yeah.
obviously, if you're paying it in a shorter amount of time. So you got to weigh it, right? What's more affordable to you? So I always bring up the conversation, hey, right now, 30 years or even 15 years is a very long time. So right now, your life is going down one way.
Mm,
What happens if something gets derailed on the income 3, 4, 5 years from now?
well said.
How is that going to affect, right? Do you have savings? Are you able to handle that? So the safer bet would be usually do the lower payment, so the 30-year, and then you can just add extra money, the principal. So you can almost make that 15-year payment, so instead of paying it off in 15 years, maybe it's 18 years, right? So it's, your interest rate's a little bit higher, but it's, one thing that you have to factor. There's no cookie cutter. It's not like, hey, everybody needs to do the 30 or everybody needs to do the 15-year. It kind
Yes.
of goes on a case by case basis and what they're comfortable with. And let's face it, right now, interest rates are high. So a
Yeah,
lot of
that's true.
people,
You got to take that into
are
consideration.
struggling with getting approved or being comfortable with the 30-year payment.
Yeah.
So the 15-year payment, a lot of people right now, even though the rate's a little bit lower, it's not low enough where it makes a lot of people make sense to go ahead and lock in for 15 years. I'm going to be paying, an extra X dollars a month to get that 15-year rate.
And to your point, life does happen. So you may want to entertain in the beginning to do a 30-year mortgage, but down the road, if you find yourself getting a high paying job, more money
Yeah.
coming your way, rates more favorable, you may want to entertain doing a 15-year mortgage, just because you say,
So
hey, now I'm in a better position where I can pay off this mortgage even quicker because I have more money coming in. So like you just said before, it's just kind of have to look at your situation and
so
see what works for you personally.
a perfect example is of this, say 3 or 4 years ago when interest rates dropped around the 3%,
Whew.
people bought a home within the last, a couple years prior to that, and they had a whatever interest rate it may be. So there's a lot of people that had a 30-year mortgage, had maybe 27 years left, 28 years left, relatively still a long time, were able to refinance
Well said.
to a 15-year mortgage at that
Yeah.
point at that 2.5, 2% rate, and
Hmm.
almost have the same payment now,
Well
right?
said.
So that's depending on the market, depending on interest rates. A lot of people switch to a 15-year at that point because it was the same payment, and now they just knocked off, 13 years off their mortgage.
Yeah,
So
yeah, and I know personally, at one point it was a 2020, the summer 2020. Rocket Mortgage had a 15-year mortgage um, package for at a 1.99 interest rate.
yeah,
So, like you said before, if you're early in your mortgage itself, like you said, you're 28, 29, 27. If it makes sense, it makes sense to refinance at 15 years, especially your payments are going to be identical. And what you're paying less to borrow the money to actually to own your home. So, like Ronnie said before, the biggest takeaway from this is making sure that you know your situation, but also have a professional look over your situation to see what really fits you, because everyone's situation is different. But ultimately, unless you're coming in for a lot of cash, more than likely you have to take the traditional route and buying a home, and that's what through a lender. That's through financing.
Yeah.
That's through borrowing the money from a bank, which is nothing wrong with it. You just want to make sure you have the right people in your circle to guide you and make sure you're making the best decision based off of your situation, not based off of what the next person has done
And
or hasn't done.
And that's the key. And just to kind of, in this world, right, we're all on social media looking at videos, and you know, there's never one size fits all where you have to do this. It's, you got to have someone that's going to look at your situation, assess it, and show the good and the bad, right? And then ultimately it's up to the borrower which way they want to go.
Yep. And as always, we always mention, stay local. Stay local. It's all about working with people in your market, because real estate is local. So what's going on in Seattle is not impacting what's going on in Austin, Texas, or in this case, South Florida. So, well, I guess as always, we appreciate you guys' time, and stay informed and not influenced.
All right. Take care, guys.